This is Jay Martin.
Welcome to the Silver Forecast panel, and similar to our last session, I want to do a quick round the horn, 30 seconds or less. Who are you and how do you spend your time for the audience, please?
I'm Jim Lewis. I'm a co-founder of Wall Street Silver. We're on Reddit, 200,000 members of Reddit. We have a YouTube channel, Wall Street Silver, about 50,000 subscribers there. That's what I do.
Awesome. Thank you, Jim. Jose.
Hello, everyone. Jose Garcia, mining engineer with global experience and one of the founders of VRIC, one of the most fun silver companies in the market, production, exploration. So take a look at that. It's AGX.
All right. Thank you, Jose. And Jeff.
Jeff Christian, founder and managing partner of CPM Group. We've been doing the fundamental research on gold, silver, platinum group metals since the 1970s. I've been studying these markets and other commodity markets since the 1970s. We are the only company that goes off and estimates not only mine production, which is relatively easy to collect, but secondary supply, investment demand, fabrication demand, central bank activity in gold, and other factors. So we know this market pretty much like the back of our hand, and I spend my days, I've worked about 70 to 90 hours a week since the 1970s.
Got it. Thanks, Jeff. All right, and we know Mr. Rule. All right. How's the volume of my panelists? Can you guys hear? Yep. It's good? Do we need it louder? No? It's perfect. Okay, great. Thank you. Jose, I want to start with you. You're the only one on the panel who runs a silver company. And so I'd love to get your market outlook beginning to kick this off, specifically in regards to maybe consolidation and M&A in the silver sector right now.
Oh, thank you. Yes. And we're called VRIC because we saw in silver the opportunity for a generation of miners. We are in Peru, and we thought that the consolidation of the silver space was a great opportunity. Okay, of course, we all want to see silver going through 200 or 300, but I want to listen to my colleagues today about prices. But there is certainly some potential for companies like us. As I said, we also like being in production and in exploration. Why is that? Because we are building a company for real. And when you look at the overall silver resources that are coming online, I mean, worldwide, I think the world is consuming about 1 billion ounces a year. And you want to look at where those resources are going to be coming from, and we want to be one of those companies bringing those to reserves. And I think Peru, now the second largest producer, will have a prominent role in that.
Okay, thank you. Now, getting into the demand a little bit, Jeff, I want to turn it over to you. One of the biggest conversations we hear in the demand narrative is the green economy, right? And how we're all going to be driving electric cars and the energy revolution, et cetera, et cetera. How much of this is near term and real? How much of this is actually going to drive price? And how much of this is still decades away and not really material and shouldn't be factored into our demand story?
And the fourth question is how much of it is hype?
Correct. Yeah.
Yeah. Some of it's near-term real. And if you look at the green revolution and its relationship with silver, the key impact is solar power. And solar power has gone from virtually no silver use 25 years ago to about 120 million ounces a year now. And that's going to continue to grow. There are overly optimistic expectations of how fast the green revolution can come. We queue off of the International Energy Agency, which is an independent, unbiased organization. And they look at the green revolution and they say, if you go out to 2050, the major source of energy for humankind will still be oil. The second largest will be natural gas. And all renewables combined will have supplanted coal after 2040 to be the third largest. So they are looking at a much more, that's their main baseline. Let's be honest here type scenario. Other people will say, oh no, if you look at let's assume that the governments live up to their Paris Accord agreements, then it's going to be much different. But the IEA and everybody else who's sober knows that those governments have not lived up to their Paris Accords and really have no ability to live up to those accords. So that's the idealistic scenario. or as an economist would say, assume we can pay off the debt. You know, it's just not there. Now, so solar power is there, it's here, it's now, and it's going to continue to grow. At some point, you'll start seeing silver recovered from end-of-life power, and that will slow the rate of growth of new silver required by the industry, but it won't slow the rate of growth of total silver used in the industry. In autos, an electric vehicle today uses about 1.5 times as much silver as a conventional vehicle. Most of the silver that goes into vehicles, electric or conventional, actually goes into the electronics as opposed to like batteries and battery controllers and stuff like that. And that is probably going to be much slower to emerge than a lot of people think, because we don't have enough electricity, the grids are not stable enough, and there's not enough lithium, there's not enough high purity nickel, cobalt, and manganese sulfate, and there's not enough capital for the smaller companies that actually make these components and mine this stuff. So the movement to electric vehicles is happening, but it'll be much slower than some of the optimistic projections you hear.
Okay, yeah. Jim, you want to add to that?
Just to add on to what Mr. Christian said, the figure that he used, 120 million for solar, that's only achieved 2% of our electric grid being powered by solar. So if you look at some of these projections coming from various governments, where whether they'll achieve it or not is another issue, but a lot of these countries are mandating 10%, some of them 20%, coming from wind and solar. A lot of that growth is solar. So if we're using 120 million ounces just to achieve 2% of our grid on solar, imagine the number of ounces, and what he says is, what Mr. Christian says is correct. Some of that's going to be recycled, but imagine a grid that's 10% solar, which is probably achievable technically and keeping the grid stable, but how much silver is that if 2% of the grid requires 120 million ounces of silver annually? I mean, there's a lot of different ways to calculate it, but just think those numbers could get really explosive over the next 10 years.
Yeah, okay. Anything to add to that?
Yeah, well, okay, Jim, let's assume that silver solar power grows fivefold over some period of time. That means that solar power would be using 500 million ounces. As Jose said, you know, total demand is 1 billion ounces. Is there price elasticity in solar power use of silver?
Yeah, I'm sure there is.
Yeah, okay, so this is sort of pie in the sky type of stuff.
Let me ask you guys a question. You know, the most common data point that I hear in the silver forecast conversation is the silver to gold ratio. Now, I'm super wary of statistics because of how easily they could be manipulated. I think this statistic is one of those. So you guys may lay me out. Tell me if you think I'm wrong. But I hear this silver to gold ratio conversation. My thought is that at best, it's a distraction. At worst, it's grossly misleading. But am I out to lunch on that one, or is this an important data point?
I would agree with you. The idea that price should be set based on relative abundance in the Earth's core seems odd to me. It doesn't go to utility. If gold has more utilization than silver as a monetary metal or anything else, the idea that one is 16 to 1 or 40 to 1 or 60 to 1, I don't think takes into consideration utility. It doesn't take into account production cost, byproduct cost. I think it's a factoid. I think it's a factoid that's very useful for getting stock bought, but I don't think myself it has, I think like many rules of thumb, it's easy for people to wrap their arms around, but it doesn't matter much.
Right, okay. Now, should we still be talking about silver as a monetary metal? Or is that conversation over? Is this now an industrial metal and that's where it should be parked?
Look at Jim's subscriber base. Silver is an industrial metal. Pardon me, a monetary
metal.
There are people who say it is, there are people who say it isn't. It's those who say it is that matter. They get to decide what's money for them.
Love that. Yeah, Jim, do you want to speak to your audience a little bit?
Yeah, our audience is, 200,000 are actually registered, and then tens of thousands or hundreds of thousands more that, just casual. But you look at the numbers for the bullion dealers, all of them, their sales are up 100 to 300%. I talk with the CEOs of ST Bullion, JM Bullion, Miles Franklin, Silver Gold Bull. I talk to them regularly. Versus 2019, all of them are up between 100% and 300% in their annual sales. And the bulk of that is silver, 70 to 80%, not, then gold's pretty much the rest of it. People are buying it. People believe in it. If whatever some people believe Bitcoin's money. Some people believe silver and gold are money. It's what people believe in is what determines that.
Okay, now, Jeff?
Yeah, I hate to be a specificist, but we make a differentiation between monetary and financial. And monetary asset is something that's used in the monetary system. And silver's been demonetized in most countries since the 60s and 70s. But it's a financial asset. It's an investment. And an analyst, as opposed to a demagogue, would say, okay, let me look at the way gold and silver trade. And, there's been all these misrepresentations of the reality and things that I've said about the reality of these markets. But if you look at gold and silver, you see this enormous derivatives trading, which is actually more than 100 times annual new supply. And the demagogue looks at that and says, obviously these people are suppressing the price. But if you look at it and say, okay, where
Jeff,
do I...
could you repeat that? I couldn't hear you.
Oh,
Could you repeat what you said?
I'm sorry?
I couldn't hear what you just said.
You couldn't hear that? Did you guys hear it? No? Well, conspiracy.
Try again.
Clearly a conspiracy. No, can you hear me now?
Yes.
Okay. If you look and you say, okay, there's this massive derivatives trading in gold and in silver. What does that mean? You say, well, let me look at where I find it. And I look at industrial commodities, and the ratios of derivatives to the physical annual new supply are 10 to 1, 20 to 1, maybe 25 to 1. And say, so gold and silver are outliers among commodities. And you say, well, where do I find 100 to 1? You find it in the US dollar, the euro, US treasuries, and international sovereign bonds. That tells you that regardless of what theorists might say, gold and silver trade like financial assets. And if they trade like financial assets, they are financial assets. It's that simple.
That is the definition. Okay. Now, it's a silver panel. We have to touch on the manipulation conversation a little bit, just for you, Jeff. Rick, why don't I start with you? Because I think you've been asked, is there manipulation in the silver market? And if I got you right, what you said is that there's manipulation in any free market. It's just inherent. So could you, if I got that right, could you provide context to that? And then I want to open it up to the panel a little bit.
I mean, I came of financial age in Vancouver. So I understand rigged markets, right? The Vancouver market in the 1970s was basically 300 rigs.
Or not.
Right. Well, now the youngsters are just less good at rigging. They have the same morality. They just don't have the same skill set that the old people had. So I believe that all markets are rigged, but only in the very near term. I think that trading desks, does spoofing exist in the LIBOR market? Does spoofing exist in the U.S. Treasury market? Does spoofing exist in the silver market? Of course. The idea that there is some long-time, thoroughgoing conspiracy to depress the price of silver when a rising U.S. dollar was doing that all by itself, I don't understand. I mean, who's going to put together this conspiracy? The government? They can't deliver the mail. They can't educate the kids. The Trilateral Commission? Give me a break. The International Jewish Conspiracy? I mean, come on, who's going to do this, right? Who's going to do this? And why would they have worked so hard to do it in the period 1982 to 2022 when it was happening all by itself? Now, is there a situation where somebody could establish a position in the futures market that was highly leveraged 6 months out, 12 months out, and then spoof in the physical market, do a whole bunch of selling overnight to depress the physical price so that they could monetize long-term leverage contracts? Sure, it happens in every other market. So it makes absolute sense that I remember in the 1970s when I'm certain that gold and silver markets were manipulated up because it was the easiest way to manipulate them. When it became easier to manipulate them down in the near term, that's what happened. A thoroughgoing manipulation? I mean, I don't know any manipulators who are that good.
All right. Anybody want to add color or context to that?
I would add, JP Morgan was fined $920 million last year for manipulation. That's not a slap on the wrist. That's a $1 billion fine. That's pretty significant. And it's probably still ongoing. And it's just sort of the cost of doing business for some of these metals desks. They're making profits on probably exceeding those fines. It's just something they build into the cost of business at this point. They all probably do it to some extent. It probably doesn't get caught most of the time, probably gets caught rarely. But when they catch them, they feel they got to make an example out of someone. And that's where you saw the JP Morgan $920 million fine last year.
Got it. All right. Jeff?
Sure. I mean, you have to start by saying, you asked us, is the market manipulated? And then, Rick, I think I basically agree with you. All free markets are vulnerable to spoofing and other things. And, when the GATA started, it was conspiracy with the capital letters. It was this grand conspiracy of central bankers and governments and major bullion banks to suppress the gold price. And then it became conspiracy, lowercase. And then it was manipulation. And the fines that JP Morgan got were predicated on two factors. Spoofing by JP Morgan traders that were not properly supervised. So most of the fine that JP Morgan got was for non-supervision of traders, not just in silver, but in silver and in gold and bonds and currencies and equity derivatives. Back to what you said, if it's a free market, someone's going to try to figure out how to rig it. Look at mining stocks. Anyway.
That hurts in this audience.
So now you're saying, okay, spoofing. And the third thing that JP Morgan, and the reason Morgan's fine was so big, was that the SEC, because it was mostly equities and regulated securities as opposed to commodities that they were found to be guilty of, SEC said, you guys created an environment that encouraged spoofing, and then you didn't supervise to avoid it.
Right.
So does spoofing exist? Absolutely. We did a large project on a guy who was accused of spoofing the palladium market. And we looked at his trades, and there was no measurable effect on the price. So we gave them this massive, probably the biggest data study ever on a futures contract. And they said, okay. And then the guy settled and he pled guilty because they had the tapes of him telling his floor brokers, hit the market hard. He tried to manipulate the market. He tried to push it down at the close or push it up on the close on other days. And the reality is he was guilty of trying to spoof the market, but he failed.
All right, I want to pivot now to, this is an investment conference after all, and there's a ton of venture opportunities on the show floor. So I want to talk about allocating capital into the market. Jose, I want to turn it back to you. Feel free to talk your book. I'm all about self-promotion. But what should investors look for in early stage silver investment opportunities right now?
Well, like in any investment, you want to look for a good management team, okay? You want to look for the right location, you want to look for the right kind of project, right? And it's not difficult to find. I mean, I wanted to ask Rick about silver companies later on, but really silver companies are rare animals. We are very few, okay? We are mostly, especially in the Canadian investment space, you can see Mexican and Peruvian companies, even if Peruvian are not that well known yet. But the opportunities you find to build and to put together silver districts they are very limited, okay? So I could say that in the next few years, of course, we want to see a bull market for silver because there's going to be so many opportunities coming our way. But anyway, I think one of the things I wanted to touch on today, I mean, not me because I'm not an expert, but I want to hear these two gentlemen to my left and to my right to talk about silver price and whether that's going to change in the short term or not.
Well, let's get into it then. So who has a price prediction for us today on the panel? Rick, shaking your head.
Not me.
Stay away.
Okay.
Jim or
Okay,
Jeff?
I'm going to do my usual and confuse you. So listen very carefully. On a very short-term basis, on a very short-term basis for the next 10 days, CPM Group yesterday issued a buy recommendation on silver. on what we call a short-term basis, which is the next 5 months through the summer, our expectation is that the silver price is vulnerable to a downward move. Interest rates will be rising. The percentage changes in price levels in the CPI and PBI will be coming down for simple arithmetic. You're measuring 2022 over 2021. Prices were already high in 2021. So even if they continue to rise in 2022, the percentage change in the prices will be smaller. You probably will have some reduction in the war premium as the Russian invasion continues to fail, and you'll have other factors. And so I think in the next few months, silver is vulnerable. Longer term, for the next 8 quarters, we think that silver price basically moves sideways between $20 and $28. Longer term, we think the silver price moves to a record annual average price somewhere north of $40, somewhere in the period, most likely 2024 to 2026. And then it comes back down, because that's what prices in free markets do.
Jim, want to add to that?
I think we're starting to see a lot of inflation, and especially some of the biggest expenses for mining are energy, labor. Everything's going through the roof cost-wise. So if we don't maintain these prices above $20 an ounce, you're going to start seeing some of these marginal producers start closing down mines, putting them on care and maintenance. I've seen some of these companies now need over $20 an ounce just to profitably or just break even. So at some point, the price just basically has to start trending higher if we keep seeing higher and higher inflation. Otherwise, supply is going to start dropping off a cliff at this point. But hey, I'm an Uber bull. We're Wall Street Silver. We're going to the moon. That's my prediction.
All right. I want to ask you about your demographic, actually, Jim, because we get asked all the time at these conferences, how are you going to bring in the next generation of investors, right? And I hear, kind of like silly marketing campaigns and all this stuff. And my answer is always, they'll come when the returns are here. That's what will drive the next generation of investors, is capital gains. Also, platforms like Wall Street Silver, and only because you're relatively speaking a brand new platform, correct?
Yeah, a year and a half.
A year and a half, 200,000 subscribers. New individuals to the space largely, and I saw this froth, last year when all of a sudden everybody who'd never paid attention to precious metals wanted to know about silver, and they're asking where can they buy silver, et cetera, et cetera. So what's driving this flood of new money into the silver market, Jim?
I think a lot of people are just concerned. Everyone has this sense that we're in a bubble. Everyone, the everything bubble, the debt bubble, the housing bubble. It's some of that's popped to some extent in the recent months as the markets have come down, especially in the tech market. I think a lot of people are concerned about the big picture, about monetary debasement. A lot of people have some real fears about are we headed into another Weimar era? Is it going to get that bad, or is this something less than that? And it's tough to predict these things, when any bubble is going to pop, but I think a lot of people are buying not just silver, not just gold, any hard assets. People are losing, and that's why crypto's become so popular. A whole new generation is thinking about money and what money actually is. And it's more than just the dollar. It's more than just the euro. We're seeing de-dollarization. More and more countries are doing bilateral trade agreements in their local currencies and not the euro and the dollar anymore. People are concerned about these things on how it's going to affect their pocketbook. So people are naturally fleeing towards hard assets as a protection measure. Silver and gold and real estate are traditionally some of those protections in high inflationary times in the 70s. And so it's not working yet for silver. A lot of other commodities are responding more quickly than you would have expected silver. So a lot of people think, why isn't silver or gold at all-time highs right now with everything going on in the world? A lot of people are asking that, and I don't have an answer for that. I thought we'd be a lot higher at this point. But, silver and gold will have their day, and it's when the fear really kicks in, and we haven't hit that fear moment yet. When right now the Fed's doing this tightening thing, but at some point, the Fed raising rates, maybe another 50 basis points, maybe 75 basis points. Right now, they have to fight inflation. That's the priority for the Fed right now. At some point in the future, The economy is going to be on its knees. The housing market's going to be rolling over. We've already seen it in the refi market. At some point, the Fed's going to pivot. And they're going to say, we're going to pause on the rate hike increases. We're going to perhaps pause and just evaluate for a while. At that point, when people start thinking, oh, we might be going back to 0% on the Fed funds rate, just to get the economy moving again. At some point, the priority is going to be, we got to save the economy now. Inflation's not the priority. Well, at that point, that's when silver and gold will take off, I think.
I love that. And you know, it's good context, because one of the reasons I wanted you here today is because I try to find avalanches of capital, right? That's what we can do best as investors, is spot the avalanche before it occurs, put ourselves in front of it. That's a great strategy, right? When I see the growth of an audience in a commodity like silver, my spidey senses start going off saying, is this a rush of capital, and should I be there first? Do I need to be there first? So for new investors looking towards the silver market who want to start allocating cash, what kind of strategies would you suggest, Rick? Equities, bullion, ETFs? Where would you suggest right now is the best place to allocate cash in the silver sector?
You know, my experience in my declining years is that if you think the silver price is going to go up, the first thing you do is buy silver. There are so many people who take a strategy to its illogical conclusion, which is to say you buy Consolidated Orangutan Explorations, which is looking for silver but doesn't have any. If the price of something that you don't have any of goes up, it shouldn't have any fundamental difference to your price. So if you think the silver price is going to go up, I think the first thing you do is buy some silver. Then, if you have the courage of your convictions, particularly in a volatile market, you buy the highest quality silver producers that you possibly can. The idea being that if the silver price goes up, their margins go up. Not someday, but tomorrow. You know, you become a net present value investor. Think of a circus master's whip. The front of the whip moves first, but it's the shortest move. That's silver. Then the next part is the senior silver producers. Then the next is the high quality but not senior producers. Then the developers. You have time to play the game, from owning silver all the way to owning the penny dreadfuls. But buy the best first.
Anything anybody wants to add to that?
You're asking about people investing in silver, and the response is people signing up to listen to demagoguery on the internet. A lot of the 200,000 people who have plugged into Wall Street Silver have been silver investors for a long, long time. You have had the silverstackers.com for decades. Much of the silver that you've seen move into the ETFs since they were created in 2007 was investors who had 1,000-ounce bars selling those 1,000-ounce bars and converting them into ETFs. So it's very important to distinguish between people who, you see this with, you see this in other markets. You have to distinguish between people who are buying silver and people who are listening into silver rhetoric. And what we've seen, and it's been demonstrated in the price since Wall Street Silver came, you had a blip up for one day in the silver price, and then the silver price has drifted lower, sideways to lower ever since. That suggests that you're not seeing a lot of new silver investors. You're finding a lot of people who have a very strong pro-silver investment conviction looking for justification to maintain that conviction. So you have to really look at the investment demand. Now, if you look at investment demand, it fell very sharply 2017 to 2019. Got down to 40 million ounces net physical silver investment demand in 2019. In 2020, it doubled to 80 million. In 2021, it rose another 37% to about 111, 120 million. And this year, it's probably going to be off a little bit. So the bulk of the increase in investment demand for silver occurred in 2020 before Wall Street Silver came along.
Jose, I want to give you the last word.
I'm very glad to hear from two different perspectives that silver is not going down, it's actually going up. And that there is actually very few junior silver companies producing, so I'm glad to be in that space. Rick doesn't own my stock, but I hope he will tomorrow. Okay. But just that.
I'll loan you money today.
All right, please give my panelists a round of applause. Thank you.
This is Jay Martin.